Hi guys, thanks for tuning into another episode of Nuggets News. Well, it's been a huge news week. We've got so much to get through. Last week's episode ran for over an hour, so I'm going to try and whip through everything a bit quicker this week. I don't want to waste your time. I want to get through all the headlines, but I certainly do respect your attention. So we do welcome over 1,000 new subscribers again this week. We've had some cracker videos and interviews. I hope you guys are enjoying the content. Look, please share those with friends and family. A lot of the time, YouTube is shadow banning all sorts of videos, so they won't pop up in your newsfeed, even if you're subscribed. So it does help if you have that bell button ticked, but even so, we do rely on people really sharing these videos to help spread the love. So if you've got people that are new and going down the rabbit hole for the first time, we continue to pump out these free resources on our website. So what are financial markets? And I guess the question that a lot of people are now asking is, what is money? And if the government can print all this money, why do I pay taxes? And it's starting some great conversations, I guess, is one of the positives that has come out of all this. We do welcome 70 or 80 new members again this week. It's just been awesome. We've had, I think, 300 in the past 3 weeks come into our premium community, join the Nuggets News family where you get all our extra research. And I guess I'm going to talk about how some of the older members of the community that have been with us for 3 years now have become some of the best research contributors themselves, which is great to see. And you guys obviously do get a next level tier discounts with all our partners and affiliates as well. We do really want to thank everyone that does look after us, including FTX. You guys know that I do all my trading there because of the range of great products they have. The altcoin indexes, we're going to talk about how relevant they are at the moment when we've got all these altcoins moving and how you can use them to your advantage, as well as hedge with their options. They've got the volatility contracts and just a range of things that others don't. And they're currently running that man versus machine competition if you are a trader. And don't forget that link down below to get a discount on all your fees there. I do just want to mention a bit of housekeeping. We have sent out the next round of bonuses. So anyone that does sign up to eToro, if you're interested in trading stocks, gold, commodities, I know the US dollar is something we talk about a lot. You can do that all on eToro, and we do have that $100 Bitcoin sign up bonus. There's a link for that down below if you're interested and all the details on it. But if you've signed up, we have dispersed that next round and you all should have got your $100 Bitcoin by now. Okay, so let's get into the local news, and it's a bit of a sad story to start off with. We've got over 100 smaller newspapers being shut down, moving to digital. I guess it's a sign of the times, and different agencies have spun this different ways, but I guess we're really lucky to be in the position we are in with all your support and growing, because people do choose to consume content online and digitally these days. In terms of the Aussie economy, we've got 800,000 construction jobs and tourism that could go without this extended government support. And man, oh man, how interesting is this getting, the relationship between the central bankers and the politicians? Someone like Philip Lowe coming out and talking about the need for the government to extend their programs. And that was sort of the area that they stayed out of in the past. And we've seen this in the US as well. But sure enough, this is something that I predicted 2 years ago, that the government would unveil these big first homeowner grants or big stimulus and bonus packages, because housing's unaffordable and they're just not going to let it come down. So they're going to continue to inflate the bubble in any way they can, and it's nuts. At some point it doesn't end well and it drives inequality, but it looks like they're going to unveil another big some sort of grants or scheme across the board this week. Labor obviously wants a housing plan to support jobs. It's just, why is it always housing? Why can't we think about science, healthcare, technology, all these other areas? It seems like the first thing we do is, how can we hand out and give people more money to go into more debt to buy a house? And I just don't agree. I think there's better ways to go about it. Neil and I did an in-depth dive into everything that's going on in the housing market. We've got our video with Martin coming up next week as well. But this was Neil, who's a friend of mine and one of our members. He's on the front lines, and he was talking about all the bad stuff that's happening back in the GFC, before the Royal Commission. So that was a really interesting interview. I know a lot of you enjoyed. Australia's dreams of the high-speed rail, apparently they need to be abandoned. What do you guys think about this? I know how congested it is. I just don't know how you could get this right to where it needs to go between Sydney and Melbourne with some of the roadworks that I've seen have been going on for 5 years in Sydney. But again, let me know, do you guys think that this is something that needs to happen? I know other countries around the world got that infrastructure in early and it's working really well. But I think there'd be a really long lag time to get something like this up and running in Australia. Now, the other big news this week was that relationship between the Belt and Road Initiative and Victoria having some sort of dealings with China. And at the moment, we've got those big tensions. Australia's in a rock and a hard place. And the US came out and Mike Pompeo said something and then it was retracted. So, look, everyone is on eggshells at the moment. And that relationship with China, we know, is so important to us. But is it going to continue to play out the way it has in previous years, where they just take all our commodities? And I've spoken to other people to get both sides of this story, and I try and keep these neutral. So you guys let me know what you think of all this in the comments below. But yeah, China's new iron ore regulation, some people are saying that this is just a minor thing, and other people are saying that it's the first of their many things that they want to tariff and really push back against Australia. So here we go. This is the link on Twitter if you guys want to watch Philip Lowe talking to the government. And look, he was talking about how central banks are the only ones that can create money, but I disagree with that. We've had economists on the channel that disagree with that. And even when we have our $10,000 of our crypto and we can generate a $5,000 loan, where is that money coming from? And this is where I think the economic models just still don't work. The real world is a lot different. Now, speaking of crypto, we've got the digital yuan a step closer, and the race is heating up. We're going to get into America's digital coin when we get into the crypto news as well. But coronavirus has sparked these large bank and cash withdrawals. And once again, we're going to hear these headlines about the need to ban cash because of the digital move that all these banks and governments want to take. Now, China has secured some Brazilian soy with the US trade tensions rising. So this is the position that Australia's in as well, where China are going to look to pivot to these other developing nations to take their goods if we try and, act too tough. Now, this was a headline that really shocked a few people. I shared it on my personal Facebook and our Nuggets news pages, but central banks are buying $2.4 billion in financial assets every hour to support markets. That is just an astronomical number. And if you're not getting any of that, that is what drives the inequality. We've got New Zealand openly discussing helicopter money. So this is, a digital version of just driving a helicopter over everyone's houses and dropping money to everyone. So you're doing that digitally, and that's why they call it helicopter money. But it's just another step towards modern monetary theory and challenging all the previous, understandings of how central banks can stimulate. Now, the reason that all this hasn't really resulted in inflation is the velocity of money. So you can see that this has fallen off a cliff. People are saving, increasing their savings rates and decreasing their spending. So the velocity of money, it's just not spinning around the economy. So even though central banks have been really aggressive, you can see in terms of percent of GDP, just huge here. And Australia's been fairly soft compared to others down the bottom here. But even so, with all this stimulus, we still haven't got inflation yet. Now, tensions are rising between Hong Kong and China are going to look to, assert their authority and looking to change the legislation there. That's going to affect the banking system, particularly that Hong Kong being a business center and one of the paths for the US dollars to come into that euro dollar system that we often talk about. And the US Senate could even shift China risk into overdrive. So they don't want to let China get hold of things in Hong Kong as well. So look, one by one, there's just these tensions rising. Now, Japan have announced $1 trillion of stimulus. We've seen similar numbers in Europe as well this week, so it's just flooding in, and I think we're going to see the Fed have to do more, or Congress announce another big package as well. Now, either way, they're trying to patch over a lot of these loans that are already going bust. So $3.7 billion in those CLOs that we talk about. These were products that Japanese banks invested into, and now we've got farmers from Japan that they got into those products, and they're starting to default, and they take the loss. Now, amongst all of this, one country that does love their nuclear energy is actually Japan, but Trump is now talking about firing that up and conducting those nuclear tests for the first time in decades. So, look, is this just trying to flex the muscles? I mean, what a time to start introducing this into the conversation and start nuclear missile testing again with all these tensions that are rising. Hong Kong are scrambling to swap their currency for US dollars. This is that milkshake theory. Apparently, they're running out of dollars. So once again, my digital thick shake theory, if these guys can get hold of an app and a crypto account, they can get digital US dollars, and it's far easier than trying to do it through the banking system. A top Chinese general says attack on Taiwan an option if there's no other way to stop the independence. So again, this is just another, region of the world where tough decisions have to be made about democracy and who's in charge, and if people don't get their way, it upsets the other and they step in. Now, over to the US, we talk about these commodities which are being used in lesser and lesser amounts because of, the recession or depression, and we're now at a 50-year low in terms of the ratio of all the commodities compared to the stocks. So the Atlanta Fed have dropped their prediction as well for Q2 GDP in America down from 40 odd down to minus 51%. So really, really crazy numbers, but they're just looking past this. The market is hoping that it's this quarter that's bad and everything else is going to be good. But when we've got 40 million people that have lost their job in 10 weeks, no one would have imagined it got this bad this fast. But I just don't see that is not going to rebound like the stock market is predicting. So look, Kudlow is talking about a back to work bonus because we've got so many Americans that prefer sitting on the couch. They're getting paid more to do nothing. So now you're going to pay them to go back to work. Every day, every week, we seem to have this new program of needing to print more money to hand it out to someone else. Now, one of those, programs that's not being tapped into is the small businesses. So there's $150 billion of funds there, but those businesses don't want to go into debt. So nearly half of small business owners are expected to close down permanently. Again, it's not going to bounce back. These businesses are gone forever. And Wall Street shows a risk appetite for these small cap businesses that have got near zero profit. We're talking about all these zombie companies that wouldn't be alive, or these small caps that are, not making any money, and yet investors are just piling in to everything. Now, we've got the boomers, the good old boomers, and I think more and more people are going to look to get out of the cities, retire to the country. We're starting to hear stories about premiums being paid in New Zealand and even Tasmania or rural parts of Australia. So, look, boomers are getting in those camper vans and traveling around, but on a lot of countries, look, people are going to want to get away, particularly when we've got these riots that are flaring up in the US now as well. So the big US corporates, they've made the most of this. They're issuing more and more debt while they can, while investors have got that appetite. Corporate bond sales, $1 trillion so far this year. We've got the Fed, we know they're buying up that corporate debt, so why not issue it? And here's the numbers for some of these ETFs. $100 million worth of HYG, which we spoke about, J&K, LQD. These are all the ones that BlackRock run. 326 million there of that liquid BlackRock ETF. So look, the Fed are keeping this market afloat. You can't argue with that. We've got national central banks saying we're ready to print as much money to buy as many tech stocks as we need, because that is the mechanism to weaken their currency, because they're one of the few currencies that's going along okay, and they don't want it to get strong. So the answer for them is to print money out of thin air, buy tech stocks to raise the price, and they're doing that for their national currency. I mean, it's not fair that this is one of the things that buoys the richest assets that they own. Now, speaking of tech stocks, we've had Google Drive take down a personal copy of Plandemic. So this is a video that goes against the mainstream narrative, this movie, and Google have stepped into someone's Google Drive and taken it down. So look, we're going to get to decentralized social media and file storage later, but the need, the thesis for things like Ethereum has never been stronger. Jamie Dimon admits the Fed liquidity is propping up stocks, stating the obvious there. And we've got Trump threatening social media. So those stocks that are really elevated are the FANG stocks, Facebook, Amazon, Netflix, Google. And Trump is now going to war with Twitter. He's not happy. If you don't know this story, he put out this tweet, and Twitter have got this new little blue box you can click on, and it says, look, this may need to be fact checked. And he was really unhappy about that. So again, this is going to divide people. I know in the comments people are going to say it's Twitter's fault, it's Trump's fault. It's the way that the world is going, and Trump's going to try and step in and control the social media narrative. And these are the largest, most profitable companies. And I think if you upset them, maybe they look to move to different states or maybe even out of the country. But look, places and platforms like Library, we've seen censorship on YouTube and Twitter in the past, Facebook. More and more people are using these other platforms, which is great to see. Now, in terms of the money printing and what's next, well, yield control is what we've got Williams from the Fed talking about. So this is basically where they just don't put a number out there. They say we're just going to control the yield curve. So if it gets too high, we're going to print more money and buy more to drive the price down. And if it gets too low, we're going to try and get that yield back up because they don't want negative rates. So basically just manipulating interest rates. And again, it always has a side effect. You can't just play God forever. And that's why these big cracks and crashes end up happening, because they're trying to steer the markets in a direction that's not natural. So Citibank have got their negative interest rates. This is once again dropping the tiers on who gets charged. So now it's down to, if you've got in between 100,000 and 200,000 euros, you're now getting charged that fee. And again, that just keeps dropping down. I remember when it started at $1 million and people were saying, it'll never happen. And it's just gradually working its way down, the people that get fined for having money in a bank. Now, that's why we're seeing people just go into assets like gold to get out of the banking system. And we've seen these huge flows, $62 billion into these ETFs that actually hold the gold. There's a lack of physical out there. So Venezuela was suing the Bank of England over those gold reserves. And as it happened, they actually helped them settle. So they said, look, we don't have the gold, whether or not they admitted that, but here's some food and medicine and stuff that Venezuela needs. So this is what's going to happen. They're going to not give you the gold. They're going to try and give you money or other items that they can get hold of, because they can't get hold of the gold. So JP Morgan is saying that this surge in gold is a sign of eroding confidence in central banks. Again, it seems like Jamie Dimon and JP Morgan are stating the obvious a lot lately. It's the largest ever physical transfer of gold. We see that premium between the futures, the cash markets, and the actual spot price. And again, there's that silver trade, that arbitrage that I've been talking about that you can execute on eToro. And we've got the smart money. So they are selling stocks, they're buying gold, and it's the retail investors that we've seen in all these accounts that are piling into these stocks, some of which, like Hertz, have gone bust, but retail investors are just piling into them. So look, if you're in the US, I don't get why someone would buy Hertz. In Australia, it's one of the third biggest hire car company at the airport. I just don't see how retail investors could get obsessed with a car company like that. But anyway, now, I think people are starting to grasp this concept that it's not gold or Bitcoin, these hard assets, that's going up. You can think of it as fiat money is going down in value. So every year they print more. This year it's 26% in terms of the amount of money that the US have printed, expanded that M2 money supply. So when we see these numbers about the performance, the annual change in gold, we shouldn't be surprised when we consistently see these numbers 5, 10, 20, 30%, because that's how much money is being printed around the world. And over time, gold's just been such a strong performer in recent decades when that money printing and low interest rate environment has become the new normal. So the Fed actually Powell admitted that he crossed the line, and they said, ask questions later. So he's saying that the policies absolutely do not drive inequality. I strongly disagree with that. And we can see the things like the averaged hours worked to buy one share of the S&P 500. So in 1980, you had to work 20 hours and you could buy one share. Now it's 126. So just that inequality, the Fed are driving it. They are in control of the money supply, and the money supply is going to the rich. Now, the other thing I want to mention there is I often joke on Twitter about the Fed and central bankers having no idea and their economic model's not working. But he's actually stated that now. He said, we crossed the line, we acted to do what we thought we need to do, what was right, and we'll figure it out later. So his exact words, we'll figure it out later. They don't know what they're doing. Now, we've got Dallas Fed President Dudley coming out and talking about another bill being needed. So, a couple of $1 trillion, that'll do it. And then we've got the government spending a couple of trillion. A couple of weeks later, I think we're going to need a couple of trillion more. That's where the conversation is going. This is where it is, figure it out as we go sort of stuff. It really is just shocking, and more people are hopefully starting to understand what's going on. So this is a fantastic paper by The Intercept if you want to head over. It's got some great charts in here just talking about that corporate debt and the huge bounce back in all those ETFs that consist of the junk bonds the Fed are buying, the type of stocks and how much debt they're issuing. So we've got some companies like Boeing, $25 billion in just the past 2 months. So huge numbers of this corporate debt issuance. So all the Fed's programs will be in full swing by the end of this month. That's why stocks are near all-time highs, and who knows, they're probably going to get there. Now, the Fed are also talking about that new program they're going to launch this week, targeting the small guy, targeting the average man on the street. So who knows what they've got planned there. But again, it's just more money going into the system. So that stock take, yes, the valuation gap is widening between those tech stocks compared to everything else. But I mean, at the end of the day, it's just a falsely inflated market. And do you want to play that game? So look, I was certainly in the camp where I thought we'd get a bounce and roll over and drag or grind lower as people realized how bad the situation is. But that hasn't been the case at all. We're now so close to all-time highs in those tech stocks, even though, as my survey showed, 80 or 90% of people were expecting new lows. So for the time being, the herd got it wrong. Now, there's some of the new investors that are just piling in. Now, they're new retail investors. The people in the market, a lot of people were cashing out and playing defense. Now, that's not a bad thing. You're not losing money by being in cash. You're holding on to the value that you've got in terms of dollars, but if the Fed are going to keep printing money, look, it's that dangling of the carrot, that FOMO. Do you want to chase stocks and buy them at record valuations? I think there's no shame in sitting on the sidelines or being in hard assets and waiting it out, because just because it's going up and it doesn't make sense doesn't mean you should necessarily chase it. That is the decision that you really do have to make. So guys, if you are doing all of that yourself and looking after your own wealth, New Brighton Capital can help you set up that self-managed super fund. We've got a partnership with the guys over there, so free 20-minute consultation. You do get a discount on those fees. Members, you guys get a bigger discount as always. Head over to that website, check out their guide, and they are the experts at helping you get set up with Bitcoin, any crypto, gold or silver, as well as all the usual stocks and bonds in your self-managed super fund. So staying with Australia, we've got a great program here from RMIT. Well done to the guys over at Stone & Chalk, who I know, launching another post-grad program with IBM. And there's going to be plenty of blockchain jobs. It's kind of funny that we still have the maximalists that say that it's only Bitcoin, that's the only blockchain. I mean, just look at some of these companies. Amazon, another patent for supply chain. How many times have I said that supply chain and logistics is just such a good use case? VeChain as well, jumping in, drug tracing with pharma giant Bayer. So it's good to see some of these projects actually getting some partnerships finally with big industry players. That's certainly what token investors want, but it just means that some of these are gaining traction. Now, in terms of the best projects, we are doing our 5 fundamental analysis research reports every month, and we have had some absolute crackers. Just about every one of the best performers this year in the top 100 we've picked. So look, hats off to Matt, who's our new head of research. He has just picked some doozies this week and helped me. And not only that, but I just wanted to give a bit of a shout out to some other members. So firstly, guys, if you are in the group or you're thinking of joining, before we launch the new platform and the app in the coming weeks and months, head over to the group. This is all in the unit section. You'll find the member-only report. So this is the silver, the precious metal stuff, as well as the macro stuff. and all the 5 fundamental analysis with all the projects we've covered. But I did want to give a shout out to Ace. He's done some great write-ups on some of these sort of mid to smaller tier projects that he likes. I think IOTA is sneaking under the radar a little bit at the moment, and particularly Kyle. So he did a big write-up for us on Energy Web Token on the 13th of May. Flying under the radar, and sure enough, once again, he's picked a winner. So he got onto Chainlink before anyone as well, a good year or so ago. So well done, Kyle. I did a post up. If you remember, click on these guys' profiles and click follow, and then you can get notifications when they post as well. But Energy Web Token, since that post Kyle did for us, it has been on fire. So it was up, 300% since that write-up. So thanks, Kyle. Guys, take some profits. Everyone's getting very excited about this one. It's had some partnerships. There's a lot of competition in this space, including our own Power Ledger in Australia. They've had another peer-to-peer renewable partnership in Thailand this week. So, a number of projects are competing in that space. And whenever something goes up that much that quickly, I'm always just a little bit cautious. Now, another project that has absolutely pumped this week is Theta. So again, that is one that I think Kyle and Ace did write-ups on in our group. So we've got some very happy members, but this pumped when we got news that they were partnering with Google. Now, if you actually read the announcement closely, it wasn't a partnership. Google were just signing on as a validator for the video network that Theta are running. And I'm always really cautious when these projects get this huge leverage added to them. So it's not good for beginners. And in every one of my posts in the group, I say you should not be trading if you're a beginner, and you should definitely not be using leverage. So when we see something that's gone up over 1,000%, look, I know to me it's going to pull back, and I'm going to trade that, and we can trade that on FTX. And it's insane that we can trade these alts and short them, because that wasn't possible in the last bull market. So when you know something's going to fall, you can put on higher leverage and make some fantastic returns, as is the case here. But look, Theta, I think it is a good project. That's just an example of how you can make money on both sides going up and down. Some people got angry with me for that, but shorting stabilizes the market. We don't want these huge bubbles that have huge crashes. We need people on both sides of it so it has a smoother rise to the upside. Now, Lithuania's central bank to fully deploy their blockchain platform by the end of year. We know that JP Morgan paying out for this fine of overcharging crypto fees to the different crypto businesses there. The next story I want to get to was, so the federal judge has merged the 2 class actions against Ripple. So look, these different payment coins, the way that the banks are working with the crypto companies, that was the theme I had for these couple of articles there. And I think, look, Ripple has been lagging. I actually expected to catch up in the short term trade-wise, but I just want them to get this out of the way. I don't think they can be a strong performer while they've got this hanging over their head, put it that way, when we've got all these other projects and banks launching their own blockchains and trials. Now, a really interesting story here, we've got Telegram, and some of the Chinese community members have launched their own project. So basically, I'm not sure if this was a hard fork or just a clone of the open source code, but with the trouble they got in with the SEC, they're not allowed to launch and distribute the tokens. So some of the Chinese investors say, well, we're just going to do it. And this is where you get into the different regulatory jurisdictions, and you can't really stop Chinese investors from still launching the project. In terms of the digital dollar, this is the closest we've got to a US central bank digital currency, because it's been launched by former CFTC chairman Giancarlo. He's taken this vision that he wants to make it a reality, because he thinks the US are going to get left behind if they don't. So there's a lot of hype around this, but if you believe in my digital thick shake theory, you'll know that yes, this is going to get the hype and the talk, and central banks and governments are going to think that this is going to give them a lot of power and everyone's going to want to use it. But there's already a range of stablecoins that have got market share. Coinbase have already got USDC. Now they've added custody for Tether, which a lot of people would not have picked. They've got Maker on board as well. We've got Gemini Dollar. They're now partnering up with Samsung to get Gemini exchange integrated with the smartphone. And they've got their stablecoin. So all these other dollars that are held and run by private companies have got far more traction and a head start than anything that the government are going to issue. Who is going to trust the government stablecoin that's going to freeze your account at any time compared to these, particularly the decentralized coins like DAI. So Cardano had a big pump as well this week, 12%. This is another one that's going to give you rewards if you stake it when we finally launch that Shelley mainnet. So it's down over 90%. These are the sort of coins that can have big gains as they play catch up there. Polkadot is another one that's going live. This is going to be competition for Ethereum, cross-chain compatibility. It is launched by Gavin Wood, who was one of the founding members of Ethereum. We should also mention that Charles Hoskinson of Cardano was a founding member of Ethereum. So look, everyone's got their own ideas they're experimenting with. Enigma is one that I really liked and I covered. So private smart contracts. They've actually, the community has relaunched or rebranded as the Secret Network. And we don't have all the details yet, but it looks like there's going to be some sort of decentralized governance, maybe even a token swap coming up. So definitely keep an eye on that one. And I've got some of those Enjin tokens that I'll be swapping over to the Secret Network once we know more. Speaking of privacy, Brave browser. If you haven't got Brave yet, guys, it's free to use and it blocks ads. So every time someone complains in the comments, I just think to myself, guys, get the Brave browser that blocks all the ads for you. Privacy browser enables encrypted video calls. So look, everyone is so stoked about Zoom, and it's overvalued in my opinion because we've got so many other apps, whether it's the Whereby program I use or now Brave, we can do these video calls to each other, and even Facebook have added that technology. Another big company in the gaming space that has integrated with Minecraft is Enjin. So that was the interview. That was the clue that I dropped for you last week, particularly members. You guys got that interview a few days early, and that one certainly did have a little bit of a pump as well. So look, Minecraft's got 100 million users. Hopefully a lot of them start using that Enjin plugin, and that is going to result in a lot more use of the ENJ token for all those items that are being minted. A little project, Dragon Chain, that's been quiet for a while, has funded a crypto TV series. So, look, this is Discovery Science. I'm looking forward to checking this one out. A few of you guys I know are keen on Dragon Chain. Let me know what you think of this one down below. How did this come about? What's the focus of the series? Is it just about Dragon Chain, or I guess more crypto in general? Now, this is the story I wanted to get to we spoke about before. So Trump's threatening Twitter and decentralized tech may win. Never before has the need for an unstoppable censorship-resistant platform been there. We've got so many technologies coming together to build this new Web 3.0. So Handshake is an example of these. This is again, human-readable names instead of addresses to send your tokens or your Bitcoin to. More and more of these censorship-resistant websites. Ethereum name service we've got, and now Handshake for the Bitcoin community as well. Minds is a little Ethereum-based social network that I post all my content to, one of many decentralized platforms, and that's now got 2.5 million users. So they had a cool upgrade the other day. Really impressed, and I think one of the reasons we've been able to grow really quickly is supporting these genuinely decentralized communities, and they care about it when you actually take the time to post your content there as well. A little app I wanted to mention here was mStable. So this is now live on the Ethereum mainnet. You can see here, if we just zoom in, you can mint, save, swap, redeem all the different US dollar stable coins that are on Ethereum. So really cool stuff. We're seeing all these wallets and features come together. I love it, but one of the dangers I want to avoid is piling too much risk on top of each other. So crypto users could soon receive interest from two DeFi protocols at once, because the Aave protocol has introduced these Uniswap tokens as collateral, where you can sort of use two tokens as once for liquidity, and you can earn interest on both. Now, whether or not that's getting too much leverage and risk involved, that's what we need to, I guess, tread really carefully for. And luckily, we've got projects like Nexus Mutual where we can start to insure some of this. Now, this was a great article by DeFi Rate talking about how Nexus Mutual, who are the Ethereum-based insurance company, wanting to become the super efficient Lloyd's of London. And I've done an interview with Hugh. This is a project that we've done our research reports on as well. And I've done a tutorial on how you can purchase that token in the group. Now, new DeFi protocol. So this is Ren Virtual Machine. So congrats to the Ren guys. They have now launched a number of these integrations, Bitcoin Cash, Zcash, as well as Bitcoin, all swapping to Ethereum. And we can now integrate some of the Bitcoin, so wrap Bitcoin or Ren Bitcoin into the Ethereum smart contracts. And I think that's one of the reasons why Ethereum started to really run hard this week. But we're going to get to all that in a sec. Zcash have got their halving coming up, just something to be aware of. That's going to massively decrease that inflation rate, just like we had the Bitcoin halving last week. We've got another world first here. So there's lots of crypto debit cards out there, but Edu, if I'm pronouncing that correctly, this is the first one that is plugging into a decentralized backend. So DeFi, leveraging into a credit card, get your stable coins. Once again, my digital thick shake theory is playing out where we don't need the banking system. This tech that we've got on the back end is so much superior to the Fed and the banks. Compound have got their governance token. Guys, another one you should definitely check out, comp tokens, these new models that are coming out for some of the best, hottest DeFi projects. This is where I'm looking to invest at the moment. Anything DeFi is really gaining traction. We've got Umbra, so this is privacy preserving stealth payments, another form of privacy on Ethereum for ERC20 tokens and Ether itself. Send to another address. No one except the two parties know who it is, and this is something that Vitalik has been talking about as well. So well done to the guys over at Umbra. We've got custodians with 100,000 users planning on tokenizing $13 billion in assets. So Kingdom Trust, a huge custodian, talking about digitizing their assets. Now, they haven't committed to any security token platforms yet or Ethereum, but this is the thinking of the big companies that want to get into this space. This is the opportunity that Ethereum has at its fingertips. So when you look at the market cap of all the different holdings or assets out there, it's just an enormous opportunity to digitize these things and make them more liquid and fractionally tradable and quicker to transport and trade. So look, I'm really excited this is all coming together. Bank of Russia wanting to put mortgages on the blockchain. We've already seen bonds issued on Ethereum. Now, this actually means that whoever issues bonds needs to hold Ethereum. So that's bullish in and of itself. A couple of tweet threads about ETH. If you haven't read these this week, check out Spencer Noon. Just talking about the amount of gas being used for fees, and it is just a powerhouse what is happening at the moment on Ethereum in terms of stablecoins, DeFi, and everyone is getting ready for staking as well. So no matter which way you look at it, whether it's the development, the size of the community, the miners, everything was just pointing up, and that finally came together this week and resulted in price action. So 57% of the ETH supply hasn't moved on chain for a year. That's people hodling. 16% not moved for over 3 years. That is some of my coins. I don't plan on selling them for another couple of years. And the big change that's coming up is obviously that move to staking, where even more people are going to lock up their coins and get the rewards. So we've already got 37,000 validators on that testnet. I mean, that is really amazing. There's no danger of this being too centralized at all. So many people are keen to stake and earn those rewards. So at the moment, the leading project to do that is going to be Rocket Pool. This is one that we picked in our research report back in December. I interviewed the team a couple of weeks after. Check that interview out if you haven't already. And this project is now up 1,200% since we did that research for our members. And I know some of you are very happy. It's still not really, in terms of the market cap, there's still room over time. So look, always cautious. You never want to go chasing the market when something's gone up this much. You've probably, if you're thinking you've missed it, there's going to be more come along, or wait for your pullback to get in, guys. But don't FOMO into these projects, okay? I'm not going to sit here and tell everyone to buy it just because I like it and we picked a winner. You've got to continue to do the research yourself. We can help you with that, with all our research, but you've still got to do that final part yourself. To stay on top of all the best projects, we've got our Ethereum monthly update that we put out on Friday. Look, I'm a bit surprised that this only gets 10,000 views. I'd be thinking that this is one that should be getting 10 or 20,000 views because there's so much happening, and this is where the huge gains are to be had if you're picking your winners and doing your research in the Ethereum space. I've already mentioned the compound governance token there. The other big news in terms of enterprise adoption of ETH was this baseline protocol. So look, really making it easy for the Microsofts of the world to use the public blockchain and keep their data private. So amazing to see how far we've come, even in just the past couple of years. Now, this was a post I put up on the 17th of May for our members when, alts have been out of favor, and some of the people that were talking about alts turned into Bitcoin maximalists, and there was that real capitulation. But as long as we sort of held this level here, this is where we use our mix of technical analysis with all the fundamental analysis and on-chain data that we just looked at. So that made me very, very bullish on Ethereum, and since then we've obviously had that huge breakout this week. So that is awesome. I hope all you guys have done well. Thanks to you, Crypto, for covering my stock to flow analysis of Ethereum. So if you didn't see this chart, everyone knows the Bitcoin stock to flow, but I actually modeled the same thing for Ethereum. So we're currently in this white dot, which would suggest that we're undervalued, all else remaining equal. And once we move to proof of stake, we move to the black dot, where we'd be severely undervalued at this market cap. Again, all else remaining equal. Now, there's a lot of other things that come into play, obviously, but either way, I think by now you've probably seen enough evidence that Ethereum was undervalued. There's more than 4 times as much Bitcoin in Ethereum now, so in these wrapped tokenized models like we spoke about, than on the actual Lightning Network itself. That's really good for Ethereum as well, being able to have Bitcoin as collateral. And in terms of the Bitcoin demand, it's not like that's dropped off as well. It's just these cycles between alts and Bitcoin are going to continue to play out. And sure enough, we've got this news that Grayscale, one fund alone, is buying up all the Bitcoin supply and then some. So this was exactly what we were expecting to happen with the halving, where it reduces the new supply of coins. And if supply and demand, that is going to continue to push Bitcoin's price up, all else remaining equal. Now, Goldman Sachs, again, went against the grain. So JP Morgan is stating the obvious, and Goldman Sachs are doing the opposite. Look, I'm not even going to talk about it. It was just mind-numbing what they were saying. Their takeaway message was the US dollar will not be debased. I mean, look at this chart. I've got this chart pinned on Twitter, as you guys know. We've got the national debt. That's gone up 3 trillion this year. We've got M2 money supply. As I said, that's gone up 26% this year. Purchasing power is going down. Inequality is going up. It is just moronic to say with all this money printing that the US dollar is not being debased. Now, final couple of stories here in the Bitcoin news. We had those 2009 miners sign that message calling Craig Wright a fraud, talking about the Lightning Network being a significant achievement. So the reason that that's so important is because it's people from 2009. And we have all these theories that the Lightning Network is a conspiracy to cripple Bitcoin. But obviously we have these very early supporters of the network that are encouraging of this technology. And yes, we need to improve it. We need to do other things, okay? But this takes time. And we're all Satoshi, apparently apart from Craig Wright. So very clearly he's going to have some explaining to do in court because he told the judge and swore an oath that these are his Bitcoin addresses. But the owners have just called him out and called him a fraud. Now, in terms of all those Bitcoins in the custody, we've got Coinbase acquiring Tagomi. So that is the second time around there. We've got BitGo joining the custodian race for prime brokerage services. So they want to get into the security space as well as the crypto space. Hash power migrating from east to west is something that I've spoken about in great detail, and we tackled it in our monthly mining interview we did with Will this week. If you want more details about how global mining has changed and what effect the halving had on the network. And finally, tying all this macro together, guys, along Bitcoin if US bond yields fall. So if we go to zero, if we go negative, I've been saying it for years, that is the final penny to drop for all that trillions of dollars that's parked in the bond market to now be better off in gold or Bitcoin or an asset that is not losing them money every year. So look, big picture, high time frame, all these central banks are printing. I think everyone was expecting a nice easy pullback to buy in, but I said at the start of this week that I'm expecting that these scenarios are far more likely, the green and the blue, than everyone is giving them credit for. And the herd does not get what they want, and that is what we focus on so often in my premium group, staying one step ahead of the herd. So when we look at this downtrend, on the weekly time frame, depending on how you want to draw it, we've either cleared it and we're just sort of coming back to retest it here. If you want to look on that log scale, even so, it's very hard to make these arguments that we haven't cleared. So the only thing we're really waiting for now is that that true horizontal to clear that and make it officially a higher high and break these downtrend, these series of lower highs that we've had. Now, I definitely think that we are not in a bear market just because we're declining. At some point, you have to admit that we've had huge volume come in, a lot of buyers. I've got new people messaging me, how do I buy Bitcoin? How do I buy Ethereum? How do I store my coins? So once again, I'll keep repeating it, guys. There are new people coming into this space. I've never been more bullish on everything that is taking place. If you want to join us, head over to nuggetsnews.com.au. Don't forget those sign-up bonuses with our affiliate partners down below. But thanks so much for tuning in. Smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.